You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Hey, pleasure to be here, Jim. Thank you.
People are sitting here waiting for the U.S. Fed announcement next week whether they're going to raise interest rates or not. And I think they're in a position right now, dare us not to.
Yeah, exactly. You know, it's such a coin toss, I think, if they're going to raise rates or not. And there's so many things in each direction. Like there's a bit whole political side of things, and then you've got the whole other side of the story where they're trying to make everyone think that the economy is doing so well and earnings per shares are through the roof and all that stuff. And, you know, it's a pull. Do they raise the rates? Do they not raise the rates? It's right at Christmas time. Do they want potential crazy volatility right here at Christmas time? It's going to be, you know, everybody is really just sitting in limbo. And the last few days, and I kind of expect this to go right to the year end, the stock market is going to stay really volatile in this range. We have a big up day, big down day. We've either have huge volume and it tends to be selling, or we have, you know, these rebounds that happen on not the strongest volume, but these strong rebounds percentage-wise. And I think we're just going to continue to chop around in this sideways range in the stock market until we find out what the Fed's going to do on December 15th and 16th. And at that point, I think things are going to have a pretty big move. And depending on what they do is going to obviously trigger some big waves and ripples through the market. And if they raise rates, you know, we're going to probably see the U.S. dollar explode to the upside. It's primed and ready to go. The long-term chart of the U.S. dollar index is pointing to substantially higher prices. And, you know, if the U.S. dollar takes off, we're going to see commodities, which we kind of talked about in our last interview. If the dollar takes off, commodities are going to get hit really hard. And they're already out of favor. Nobody really wants commodities. They've lost their shirt on them. They just continue to keep falling, especially crude oil hitting new multi-year lows here. Nobody really wants them. And of course, if the dollar rockets higher, we're going to see continued bleeding in the commodities market. Gold, I have a downside target. The lowest downside target I have with some different technical indicators and analysis is $27 a barrel. And the next level up will be 29. If it breaks through 29, 27 will be the next. And it's looking pretty bleak. And, you know, that is going to cause some serious ripples through the economy, especially in Canada here, because we are very focused on natural gas and crude oil. And if prices stay down here for another 6 months or so, it is going to really hurt our economy.
Well, we have a finance minister who said, I'm here for fun times. I don't know how much fun we're going to be having if that's the case.
Yeah, exactly. You know, those are jobs. I don't know why people would want to be a prime minister or a president. It's got to be one of the worst jobs, in my opinion. Half the people always hate you, and you're always making these tough decisions that are hurting people. It's such a terrible job. It's, you know, Obama stepped right into a storm, and I'm sure he'll be happy to step out of it and pass it on to someone else. But you know, this whole big wave down in crude oil that we've seen, you know, I think a lot of people were kind of expecting OPEC to step in and support the lower prices with some type of production cap, but, you know, we didn't see that happen, and oil just kind of has gone into free fall mode the last three sessions, and, you know, trading as low as $37 a barrel, which I think is a lot of people surprised. But I think if you go back to one of our interviews from probably 6-7 months ago, I think we were talking about I've got a downside target back then around $33 a barrel. And the price action that we've seen since then is playing out kind of just as we thought. We've got these bounces, but the selling pressure continues to be there. And it just is continuing to slide lower and lower. And, you know, it's becoming a very hated sector. And just like gold and silver have been hated for several years, 4 years, I think crude oil is picking up speed pretty quick to be almost as hated, but I think it needs to continue to be under this downward winding pressure for a while longer before everyone is flushed out of the energy sector. I know a lot of people are still trying to pick bottoms in gold and silver and especially crude oil. And until all the people have ended trying to pick these bottoms, that's when the bottom will come in. They need to finish trying to pick up at a discount and then getting flushed out. So we're getting closer, but I think we're going to see a bottom happen in gold and silver come 2016, not this year.
I've always been told it's a huge danger to try to pick a bottom.
It is. You know, to me, there isn't much of I don't see any reason why you try to pick a bottom. Once a bottom's been put in place, and you see the initial impulse wave to the upside, you see bullish price action, and you see all the stocks based around that commodity, for example, outperforming and showing good signs, then you can get in and you can ride the train that's going up. But there's no point in jumping into a waterfall right at the top, or you never know where the bottom is, and price falls just like water. It just runs down the chart extremely fast, and eventually it'll find a bottom. But until it does, there's no point in trying to catch it. It'll just continue to slide. So you can always get into gold and oil after these bear markets have ended and have started to move up, because these are major bear markets they've been in. And once they turn around, they're going to be in a major bull market that should rally for years. So why try and jump in 3 months early and lose 50% of your money and have to make 100% return just to get back to break even, when you could use that money for something else? And in 3 or 6 months you can get in, and pretty much from the first month you get in, you're riding profits and growth. So I don't see the point of trying to jump in and grab bottoms. I know it's exciting. If you grab a bottom on something, if you've done it in the past, it's highly addicting because you make ridiculous amount of money very fast, but it's a gamble, and the odds are you're not going to pick the bottom.
If the U.S. Fed raises rates, won't that actually hurt the American economy because it'll be even harder for them to export goods?
It will. Yeah, it'll be, the dollar will be so expensive. I used to do a lot of importing from China, and of course they still take a lot of the exchanges are in U.S. dollar, their product, and it's just not really that feasible anymore. And same with buying stuff from the States. And, the States have that same problem. A very expensive dollar makes it really hard to export and sell goods. And of course, the interest rate hike will put a big ripple through kind of the real estate market too. And, we've seen a huge bubble in the real estate market. And there's signs that we are very close to an end. And depending on what the Fed does here next week, that could be the first kind of chink in the armor that signals that the housing market, this little bubble here, is going to deflate, and we're going to see a little bit of a pullback in housing prices.
And of course, we have, Vancouver and Toronto are the big elephants bouncing around the room, but in the rest of Canada, there's already been kind of a real estate shock, hasn't there? Real estate is really hit or miss. Every little kind of nook and cranny's kind of got its own little environment, but things have softened up a little bit in certain areas. Obviously, the major cities, Vancouver, Toronto, they're booming. And if you're in a Four Seasons little retirement type town, which is what I'm in, prices, even when the market went soft back in 2008, 2009, the prices held up really well because there's a constant demand there still. So, there's certain pockets where it's hot, but overall, I think things are coming to an end. We're seeing new permits for multifamily units being built that has skyrocketed, it's exploded, and we've seen. If you go way back in time, I'll do a report on this, an article showing some of these charts. It's incredible, but almost going back in time about 30 years, you can see every time the multifamily dwelling permits spike, and I mean it's a huge spike. It's a parabolic. It goes straight up for a few months and it comes straight back down. Every time this happens, we've seen the real estate market top out, usually 3 or 6 months later, and we go into a 2 or 3 year bear market for real estate. Now, it's not a serious bear market. It's just the market softens, prices deflate a little bit, and things slow down. And, if the Fed raises rates on December 15th, 16th here, this could be the first kind of early warning that now we've got multifamily houses pouring into the market, so there's lots
of available space, and then rates are going to go up. And so people are going to have to move into these multifamily because they're usually more affordable. And if rates are rising, you go to the more affordable home, which is lower priced, multifamily, and we'll eventually see the overall housing market soften. So I think we're about to see this bubble in the real estate market soften for a few years. And I think December here, the rate hike, if they do raise rates, will be the first early warning sign. If they don't raise rates, I think we're going to continue to see real estate hold up fairly well, but I think a lot of people are anticipating a rate hike next week. If they don't do it this week, then they could very easily do it in a couple months here. And I think everybody's anticipating a rate hike to come. So either way, if it doesn't come next week, it's coming very soon. And when it happens, that will be, I think, the top of the real estate market.
We'll have more with Chris Vermeulen right after the break.
See singing impressionist Andre Philippe Gagnon.
And I think to myself.
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com. Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going to happen with the prices of gold and silver?
Gold and silver, they've been on a pretty choppy range here the last couple of weeks. We saw a huge spike in price there last week, and we're starting to see some of those gains given back. Now, overall, the gold and silver are in a major bear market, and they are still under pressure, but we are starting to see some extreme levels that are showing up on the COT report that we've seen several times in the past, going all the way back to as far back as 2000, more or less. And more or less the situation is that short-term traders are now, and they're very rarely are they bearish on precious metals, but they are now bearish on precious metals. And that is a very good sign. When the general public is bearish on something, it usually means a market bottom is about to happen. And kind of the next step up from the general public, you've got the large investment players. They're also having very low, very small long positions in gold and silver, meaning they've gotten rid of almost all of their long positions. And the big commercial companies, the big commercial banks, they have very small short interest. And all this is loading up a ton of energy to an explosive move to the upside. So I think looking forward, probably a month or two, I think we could see gold have a nice little pop here. Gold and silver have a pop in price and kind of chop around here a bit. This coincides actually really well with, it's almost, you could argue that it's kind of foreshadowing that the rate isn't going to go up next week. And if the rate doesn't go up, I think we're going to see gold and silver have a really strong pop, and that's kind of what it looks like from the COT report that's about to happen. Now, we've seen a good pop here in the last 3 days, 3 days ago in gold and silver, but that was just a short covering little bounce that we had. I know a lot of people got excited. It was a huge move in gold up 1 or 2 days back to back, but overall, all that was a bear market kind of rally, a little short covering rally. So many people were short after that drop from 1190 all the way down to 1050. And, you know, there was a perfect short play, whoever caught that. And, of course, price started to rise. And as it broke certain little resistance levels, it triggers a wave of buy orders. And, of course, it created a strong pop. And now we're just seeing that fizzle out there, this week. But overall, depending what happens on December, a lot of things are hinging on the rate hike next week before I think we're going to see things really kind of shoot off in different directions. So the whole market is in limbo waiting for this. You know, it's in the grand scheme of things, it's just a quarter basis point. It's really nothing, but everything, it feels like there's so much leverage on this quarter basis point that the whole market is going to kind of scrolling like everywhere, you know, explode in different directions on this quarter basis point.
I was wondering with oil why they didn't tell everybody, look, just go on holiday for 3 weeks, turn off the taps, and then come back and we'll all enjoy better prices again.
Yeah, I know. I don't know why they just keep flooding the market with crude oil too. It's just, everybody wants to push oil out the doors to keep getting their paychecks, but if they would just cut back, create some demand for it, and, it's just crazy. It's just, everybody's just continuing to keep the productions going, and crude oil just keeps going into free fall mode, and, the whole travel thing too. I don't think a lot of people want to travel right now with what's going on in the world, and of course, you can see that in the transportation index. There's just transportation stocks are getting hit really hard. There aren't a lot of products being sold in transportation of that stuff moving around the world right now. It's just completely come right down to a grind, and of course that's where huge amounts of volume of oil are used, and of course it's not there. And that was an early warning indicator you and I talked about several months ago, was the transportation index, breaking down months and months ago, and how that's the first early warning that stores and companies aren't selling really much product. We're hearing record earnings per share, but these people aren't really selling more products. They're buying back shares, so they've got more earnings per share because there's fewer shares for it to be divvied out to. So the transportation index definitely has been, I think, dead on for that. And, this market is slowly topping out, and I think we're only 1 to 3 months away from a major break to the downside for equities and a potential big rally for gold and silver and bonds.
And on the consumer front, I don't see anything out there that's really new that I really have to have. I'm going, what, another sweater, another computer, another TV set? I've got all those.
Yeah, I know. I was talking about that last night with a couple of friends also. There really doesn't seem to be anything new and exciting. The big craze that everybody wants, something. It's not out there. I don't think they're, the whole Apple stuff has just come to a grinding halt. Now, I did hear talks that Apple has been working on, they've gotten some very big and broad patents on 3D printing and painting objects and changing colors, and I just read that a couple of days ago, and they might be kind of working themselves, but from the sounds of it, into a corner where they have some great ideas. They don't really want to get into it, but they are going to be licensing potentially their patents. So it's pretty interesting. They're working on stuff, obviously, but nothing has really come to light of anything new and really exciting for the general masses.
Yeah, and then, of course, we'll have our driverless cars. Google says it wants to make them. I think Amazon wants to make them, but I haven't heard anything from the major car makers about getting into the driverless car industry. They could find themselves just standing there watching.
Yeah, I don't know what, I would think they don't want that to happen. I would think they don't even want to mention the word, because then people would be like, what, driverless cars? And they'll go and they'll look into it and they'll be like, well, why wouldn't I get a car that is, I've got my own chauffeur built into it? Why would I go buy a GM? They're probably scared to even bring any type of exposure to it, because, we just don't, they're not available yet, but I'll tell you when they are, the Tesla's getting pretty automated. My neighbor has one, and he took it out to go get Chinese food, and he put in the address, and it pretty much did almost all the driving, and it does everything. It's really incredible what it does. And he just downloads the new software. He reads the new manual and instructions for how that new updated software is going to drive your car and what you are still responsible for. It was a really eye-opening to think, like, that is actually on my street, a car that can drive and turn and do all that stuff. It is mind-boggling. And I'll tell you, when we can get cars that are driverless, I'll be looking at them. Why wouldn't you? Like, it makes great sense. Imagine, it's just so convenient.
Right, and here we have people arguing over the future of the taxi business. The taxi business could just disappear.
Yeah, I know. Yeah, I know technology is slowly writing the humans out of the equation.
Yeah, I know. Who needs those human things anymore when us machines are so much more efficient? Yeah,
those humans did nothing but make mistakes. Why have that?
Your toaster tells you, I don't feel like making toast today. Chris, thanks a lot for chatting with us.
Hey, appreciate it, Jim. Thanks for having me.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.